The markets were all over the place today. Where do I see them going next? I'm going to talk about it. I am Dr. Stock, Doctor of Education. And do you know how lumberjacks work from home? They log in. Let me ask you, do you know how? They use their tree Ethernet connection. We're going to take a look at the charts for the SPY and the Qs to see what in the world's going on with them and where we expect them to go. Also, the FOMC meeting coming up on, well, Tuesday is when it starts. Wednesday is when we get to hear from Jerome Powell, find out about rate hikes and all that kind of stuff. And I do think that there's some specific things that we should be paying attention to. Now, I will be telling you later on in this video how to get up to 16 free stocks using my link down in the description, and then also where you can see my buys and sells through the Patreon with that link also in the description, which includes my options course. But for right now, I do want to get into the charts themselves. So let me pop that down and pop this up. And here we are looking at SPY, which tracks the S&P 500. And I've had this drawn on here for a while now, this rising wedge that we had, and you can see that we broke down below the 50-day again, but we did so on good volume following that triple witching day that we had. And then today we get this very narrow-bodied candle happening right here, almost symmetric like this doji candle that we had before. The bulls and the bears are really battling out for ground. The fact that we're below the 50, below the trend line, our momentum is actually just below 50. It just touched bearish. It went even from the day before though, so not really any more bearish than what we had in the past. It is possible that tomorrow we cross back up above the 50 for the RSI, but it's also possible, being below the 50-day as we are, that we see a little bit more worry come into the markets and that we pull a little bit more red out of this, and that today was just a little bit of recovery from the sell-off that we had experienced on Friday from last week. So for this one, what do we know from looking at this? Well, if I put my cursor right here, you can see that 442, we've tried out at least 3 times now in recent history. As a matter of fact, we even tried it out here, even though we broke through it. When we opened below it, we ended up closing back above it. So 442 is acting as fairly firm support for us. And if I zoom out from there to see where else we are, if I go down from there a little bit down to 440, that's actually about where we have the bottom of this candle right here. I think 440 is that next sticking point that we have on the way down should we travel in that direction. So please keep that in mind. And then from there, we have a fairly far fall to go down to 436. So we have about a 0.5% to give up, and then 1%, and then about 1%, a little under 1% in that downward direction. Should we push back upward into this, then we have room up to the 50-day, which as of today closed at about $446. So that would be our area of resistance to the top, which would be about 0.75 up from where we're at right now. We do have this trend line to contend with, and then also we have a little bit of stuttering that you can see that happens in this area. So it's not going to be anything clear to the upside that it's going to be a fair amount of resistance. We do want to watch for volume support for that movement when we're looking at SPY. So 446 is about where we have that resistance happening, about 0.75 up from that. Should we be able to break through that, then we have room up to about 448, and then beyond there up to about 452. So that could be really good news for us. And then let me go over to the Qs, and I'll give you my take on both of these by the end of this thing. So when we zoom in here, you can see again broke down below the 50-day. This also keeping us below the 50-day, although not really able to budge us. Not a lot of conviction in today either. Even when you compare it to previous days, what we had here, there just wasn't a lot of excitement going on in the markets. And if we get a volume supported drop such as we did on Friday here, then we know that's confirmed, and that could actually push us down in a further drop. And even in terms of the momentum indicator, when we look down at the bottom for the RSI, we are a little bit lower on that. We have crossed over 50. We're in bullish. We are in bearish territory. That's worth also paying attention to when we look at the Qs as well, which tracks the NASDAQ 100. So for this one, I did put in the trade for TQQQQQQ. I'm kidding. There's only 3 Qs. TQQQ puts on this one, anticipating that we do get a drop. And I had the expiration for that for the end of this week. And I do anticipate that by Wednesday at the very latest that I'll have these closed. You can get up to 16 free stocks using my link that's down in the description of this video. Each stock is valued up to $2,000 a piece. And for the $100 deposit level, you get 5 free stocks. $1,000 and $5,000 deposit levels get you 15 free stocks. That $5,000 deposit level gets you a free share of Tesla or Google. And if you want to see what I am buying and selling that is available through the Patreon, just click sign up using the link down in the description for it. Not only do you get my buys and sells, but also my Nvidia and Tesla stock price predictions and earning forecast that I put up on the Patreon for you, and my private Discord, and also my options course that I'm constructing right now. You can get access to that as well. And it is designed for the complete beginner all the way up through advanced trading strategies, which will be built out over time as I am currently constructing the course. So go ahead and check that out. And I don't think that you'll be sorry about it. I think that you'll really enjoy what you find over there, especially the community members that I have as part of that Patreon. All right, so we got to talk about the FOMC meeting that's coming up. Pretty much right now, it's a done deal that for September, for the meeting that's coming up on Tuesday and Wednesday, that when we hear Wednesday, it's likely that there's no rate hike whatsoever. And I've said for a while now that I believe that we're done. We're going to get further evidence of that on Wednesday of this week. I think the bigger catalyst isn't so much about do we get the rate hike or not. And yes, about Jerome Powell speaking, we're going to be listening for specific words about just how hawkish he comes off about furthering the rate hikes from where they're at. We'll be listening for the conviction in his voice. And if it sounds like we will if we need to versus we are going to, we're going to listen to that for rate hikes. So the big thing here for the Fed, and let me put this up for you, is the summary of economics projections that comes out along with it. So the terminal rate was 5.6, and I don't know if you can see that on the screen here. I'll zoom in. This is the federal funds rate projected for the end of 2023, 5.6, and then 4.6 for the end of 2024, and then 3.4 for the end of 2025. We will get 2026's end of year numbers as well with this next summary of economic projections, so be on the lookout for that. But I do think 5.6 is important. If it's still at 5.6 or if it drops down to 5.3, either way, I think that we're in really good shape because that would signal no further rate hikes. If they bump that number up, and this is a median number, a middle number across the Federal Reserve Board, then that would be something that would most definitely change it. And you can see the difference from March being at 5.1 to what they had, and this is in June's numbers that we're looking at right now. We get the new one coming out, like I said, on Wednesday. I believe it comes out at 2 p.m. along with the federal funds rate decision, and then Jerome Powell speaks at 2:30. So we're going to be watching for that number to change at all. If it changes to 5.3 or if it stays 5.6, we're in really good shape. As a matter of fact, 5.3 would be a further guarantee that the Federal Reserve doesn't see any further rate hiking from here. That would signal the pause, and I think the markets would rally off of that, and that would cancel any sort of drop, at least in my opinion, that we would see on the SPY and on the Qs tracking the S&P and the NASDAQ 100. So besides changes to 5.6, looking at changes to 4.6, if that number goes up at all when they talk about higher for longer, that could be detrimental to the markets if we see that go up even more from where it's at. And please don't forget about the election that we have coming up in 2024, the presidential election, because that might have some influence on these numbers, and there might be a little bit of pressure on the Fed to lower that federal funds rate. And plus we have the economic uncertainties out there along with credit tightening, that maybe something changes by then that we get more rate hikes than what they're currently anticipating. But as far as this next summary of economic projection comes, what we're looking for is we don't want those higher changes happening. We don't want to move from 5.6 for the end of 2023. If we do, we want it to move downward, down to 5.3. We don't want to change from 4.6. If we do, we want to see it downward. Any upward revisions to the numbers that we have for 23, 24, 25, possibly even 26. If they're to the upside from where we expect them to be, that's going to cause further red in the markets around that 2 p.m. hour when the summary of economic projections gets released. So we most definitely want to be on the lookout for that. Thank you guys for watching this video. If you enjoyed it, go ahead and hit that like button. And also don't forget about the Patreon. Come on over and join us. Lots of value over there. My buys, sells, my Discord community, wonderful community members, and the options course that I'm building there. Talk to me throughout the trading day. Talk to my community members as well. Just all very passionate people about finance and just looking to make everything better for everyone. So come on over and join us. Don't forget about your free stocks from Mumu. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.